Barry, I just want to pick up on one comment you made, which I think is interesting, which is that the Canadian growth probably isn't as weak as it showed in the second quarter. Anecdotally, you're saying. Why is that, or what are you seeing? What does the Canadian economy look like to you right now?
Well, if you look at the jobs and consumer spending, they're still holding up pretty well. But, I think the Bank of Canada is for quite a long period of time has been focused on housing market. And the housing market in Canada is, valuations are dramatically higher than just about any other country in the world. And you'll see that the Canadian bank stocks have underperformed the US bank stocks. And I think there's a direct correlation because Canada's housing market, the valuations there are leave the potential for more losses in the Canadian banks than maybe the US banks will experience. So I think that's one of the things that the Bank of Canada that allowed them to keep rates stable. Um, but savings rates and consumer spending and that is still okay,
Hmm.
as it is in the U.S. too.
Do you fear, though, that there's a house that we're on the edge of a housing bubble?
Well, Canada's been on the edge of a housing bubble for you know
Yeah,
maybe even a decade, relative on a
yeah.
relative sense. Um, and whether it really causes like a situation like in '08 in the US, that's very unlikely. Um,
Hmm.
but housing affordability in the US, or in Canada, is significantly worse than other countries. And if you look at the Scandinavian countries like Sweden and Norway, who've gone under similar ones, you've seen that house prices have come down, fairly significantly, where they have in Canada, but not as much.
Hmm.
So there's likely still some pain to be held in the Canadian housing thing, but I don't think I would agree that it's going to be a huge factor like '08 or is going
Hmm.
to cause a banking crisis in Canada, because the Canadian banks are in much different situation than the US ones were.
Right. Fair point. And we do have a favorable immigration policy towards, keeping the economy going, and certainly the housing market. But the affordability issue is a real issue from a societal perspective, I think, that we're just really starting to see play out. It's been very, very difficult for so many people. And then, of course, with these higher rates, higher mortgage payments, higher inflation, food costs, et cetera, and energy, it's really squeezing the average consumer. I always believe that the average Canadian should fare very well versus the average person in many other countries, but it's not quite the case.
Yeah, I mean, there's still a lot of unknowns because of the pandemic, and it's going to take a while for this to play out. But generally speaking, asset levels, no matter what you're looking at, or stocks or houses or whatever, are very, very high by historical standards, and therefore are probably unattractive risk rewards.
Right. Which I want to talk a little bit about. Before we head to break, let's just get your take right now, though, on the U.S. Federal Reserve, and how you see that playing out in terms of, whether or not we're going to get a cut in 2024. It was going to be 2023, and now I think the consensus is for June of 2024.
Yeah, I mean, I'm still in the camp that we're going to see cuts in 2024, but the timing is highly uncertain. And what worries me most is what oil prices have done, because, I mean, like headline inflation has gone from 9% to 3%. And getting from 3 to 2, where the Fed keeps saying they want to get to, is going to be a tough slog,
Yeah.
especially, if oil keeps going up. And I do think oil is going to, there still is upside in oil from here.
Okay. We'll take a quick break, Barry. We'll take a quick break. We'll be right back.